Well, hi everybody, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter on June 15th, 2024. Remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And folks, the market had a great week except for the Dow. However, the problem is fewer and fewer stocks are participating in this rally. And this week we hear from two housing stocks, one on Monday, one on Tuesday, and housing has been lagging. So Lennar and KB Homes will be important signals to the rest of the housing market. And we looked at that chart in depth in our ETF video. Now, our weekly stock analysis video, Melly, the Amazon of Central and South America, missed earnings and had a pretty violent reaction. However, the future looks extremely bright as they are going to make this year's numbers, and next year's numbers are expected to jump once again. So it's a very fast growing company. And with our ETF video, we're looking at a 30% gain in one of our favorite model ETF top stock portfolios, which is made up of the stocks from the QQQs. Now, the hedged portfolio of one of our models is actually outperforming the non-hedged portfolio. Folks, we love this portfolio, to say the least. And let us look at the S&P 500. And yes, we had this rise this week way when we had good CPI numbers that came out, and we just jumped above this top band. And boy, you don't see that very often at all. And then the following day, it closed above it. And on Friday, it closed right at that top band. So this is a very, very important move, except we have a gap in here, which we'll see in the next chart. Now, down here, we have the buy signal that came in several days ago as the intermediate term indicator turned positive. So we like that. However, we are very overbought in here, and that's what's worrying us about this chart right here, because boy, if this turns over in here, that'll be a double top. So we're looking at maybe a pullback in here starting at the end of this coming week. So we'll see, folks, but we'll take it one day at a time. And when we look at the S&P 500, we can see where this new top was in here, this new high, and then the market dropped to the 50-day moving average and came up, and you can see right in here it held that line or tested that new high a couple of days, and then whammo, it just bounced right up. But this leaves a gap here, and whenever we see a gap, we worry about that. And Friday, this market, the S&P, closed down just a tad and gave us this little top up here. So we'll see if it forms a negative divergence. It hasn't formed yet. And when we come all the way down here, we see the intermediate term indicator turned up. But is this going to form a double top? So we're worried because fewer and fewer stocks are participating in this rally. And of course, it's the AI stocks that are leading the way, our old friends that are in our portfolio. That's why our portfolios are doing so well, because we are in those top stocks. And when we look at the QQQs, even stronger. And here we are at this top in here, and just like the S&P 500, it came down a couple of days to test that, and we're looking at 4 or 5 days in here, and then all of a sudden gap up. And when we come at this indicator down here, we see we have a nice buy signal in here, but again, we are very overbought. So we have to look at this as a sign of danger, even though the QQQs have been so strong. But these are the stocks in the QQQs, the tech stocks, that have been leading this rally almost the whole year long so far. We have to be careful up here, folks. And when we look at the Dow Jones, which has just had a horrible week. Wow. I mean, we had this double top in here, and now we're down to this bottom, and we're testing this bottom right in here once again. And we can see from down here, we just have a negative divergence this whole time as this signal, intermediate term indicator, has turned down and has not turned up yet. So we're looking at the S&P and the QQQs possibly topping out, and we're looking at the Dow possibly bottoming out. So boy, oh boy, we have never seen this kind of divergence that I can recall, where we have two of the indices that are doing so very well and the Dow just doing so poorly that it really is worrying a lot of people. So back up into here, we might just get a test of this 38,000 level in here. Now, folks, we're only about maybe less than 5% from all-time highs at 40,000 up here. So it's not like this is disaster or anything like that. We're about 5% below the all-time highs, which is phenomenal, while the QQQs are making all-time new highs. So that's why we have this divergence that we have between the different indices, because all the tech stocks, or most of the tech stocks, are in the QQQs, and a lot of the top stocks in the QQQs are also in the S&P 500. And the poor Dow just is not having a good week. So we'll see what happens this coming week. And portfolio protection, we put in Friday's daily letter that we want to buy the September 20th SPY 475 puts. They're very inexpensive, but this June 21st put expires this coming Friday. And if we have a decline this week, we wanted to get these puts out of the way. In other words, we wanted to buy the September puts, so we're buying them possibly at the least expensive price, because we may be at highs here. We don't know. We can't tell the future here. And right now, the QQQs look very, very well. The Dow looks terrible. So that's what the dichotomy is in the markets these days. So portfolio protection, we only need 3 for this portfolio. But as I said, this Friday, these June SPY puts will expire, and we wanted to roll up. Notice these June puts are for 425. The September puts are for 475. So as the market goes higher, we raise our put protection higher. And we'll just have to wait and see what happens this coming week, folks. So again, we had a very, very good week, but the Dow was in rough waters. So meanwhile, with the Dow just worrying us to death, we have the QQQs making new highs. So it depends which set of stocks you're in mostly, and we like the QQQs. In fact, we have one ETF portfolio that has 11 out of the 100 stocks, and that portfolio is up 30% so far this year, folks. So anyway, we have a little rough waters coming ahead because these markets seem to be overextended, and with the S&P and the QQQs, we have overbought conditions, and therefore we just might take a little rest for a while and see a little bit of a pullback, and then a run from that low into August or so. And we'll see what happens. We don't know what's going to happen Monday, let alone what's going to happen in 2 or 3 months. So anyway, we'll take it day by day. But we had a great week, folks, for most of you. You're all making money in our portfolios anyway. And let's take it. Let's go to the beach. Let's take our mind off the markets, because it'll be open again on Monday. Don't forget, Wednesday is a holiday, so the markets will be closed. So, folks, you go out, take it easy, be with your loved ones, stay safe, and we'll see you back here on Monday.